Hello and welcome to World Business Report. I'm Alice Baxter. Europe faces a psychological breakup as the crisis turns member states against each other. That's the warning from Italy's Prime Minister Mario Monti.
And here in Asia, markets head higher on hopes of brighter prospects for the global economy.
Plus, the falling price of gold takes its toll on the mining giants. Anglo Gold Ashanti is the latest to report plunging profits. Italy's Prime Minister Mario Monti has warned that Europe risks a psychological breakup. In an interview with the German news magazine Der Spiegel, to be published this morning, he suggests the Eurozone crisis has created resentment between nations that could trigger the breakup of the EU if not contained. Well, the comments come amid growing tensions between Germany and Italy and Spain over the policy response to the debt crisis. Well, we'll talk more about that in a little bit more depth in a moment. But first, financial markets have begun the new week strongly, despite the ongoing fears over Europe. And Sharanjit Lail's in the BBC's Singapore office for us. Sharanjit, markets are very preoccupied with this issue since the end of last week, what the ECB can and can't do. How are they faring this morning?
Well, Alice, they're faring remarkably well. We're seeing gains of well over 1% for all the major markets here in Asia. That's after that stronger than expected US jobs report on Friday essentially lifted sentiment here. We also saw the likes of economies like Indonesia releasing its growth figures. It showed a much better than expected 6.4% growth in its second quarter. Plus, you've also got factors like the weaker yen, and that's giving a big boost to Japan's export-reliant firms, the likes of Toyota. It was making big gains after its huge year-on-year rise in quarterly net profit just last Friday. Toyota, in fact, also lifted by its full-year production forecast, which is much better. The gains as well for other firms in the region, including Singapore's Fraser and Neave. Its shares jumped to a record. That's after it accepted a $4 billion offer for its stake in the makers of Tiger Beer, that's Asia Pacific Breweries, on Friday. Its shares had been suspended due to that announcement just last week. Lots of speculation now that a breakup of Fraser and Neave is likely. It's a conglomerate with interest in everything from beer to property, and that might unlock more value in that company. Still, in spite of all these strong gains, investors are braced for a lot of news this week. We've got data from China on Thursday. We'll get more clues on where Asia's largest economy is headed. It will release inflation, industrial production and retail sales data as well. It's a really big week for rate decisions here in Asia. You've got the likes of Australia, Japan, Indonesia, South Korea and Sri Lanka, all of whom will give clues on where their monetary policy is headed as the global economy starts to slow.
OK, many thanks, Sharanjit Lail there in Singapore for us. Well, Georg Grodzki is head of credit research at Legal and General Investment Management, and he joins me now. Many thanks for being with us.
Good morning.
Let's talk a little bit more about this article in Der Spiegel and Monti's comments, this imminent potential breakup of the Eurozone crisis, and the debate around the central issue of whether the ECB should be allowed to buy up the bonds of indebted countries in order to reduce their borrowing costs, and Germany's insistence that it's not the job of the bank to bail out governments. Where's the middle ground on this?
There's probably some room for compromise, something which is limited in terms of amount, limited in terms of time, which may be tied to also certain deficit ceilings. We have already the Maastricht limits. Maybe they will be modified to allow the ECB to do something for those governments which are not in excess of a certain amount of breaching the deficit targets under the Maastricht Treaty, but it seems at the moment very difficult to imagine the Eurozone falling apart because of a lack of compromise, but also it seems equally difficult to imagine that the ECB will be given a carte blanche to do as much as it wants to, because there are certain concerns which need to be addressed, and that means compromise is the name of the game.
Gazing into the crystal ball is always tricky, isn't it? Now, on Friday, Spain's Mariano Rajoy said for the first time that he didn't rule out the possibility of his country going for a full bailout. We then have Italy remaining insistent that it won't be ever going for a full bailout. For his part, the president of the ECB says he just doesn't know what's going to happen and that it's all in the hands of the market. What do you think is going to happen?
Well, Mr. Rajoy was realistic. He heard Mr. Draghi, the ECB president, on Thursday saying that they won't step in until a country has applied for support. So the message is now clear. Even Spain, which so far, of course, would have loved to receive support without undergoing a formal program, even Spain would have to formally submit a request for support. And before going on holiday, he felt he has to put the record straight and prepare his country that even Spain, which has already worked quite hard to get its deficit down, may have to ask for support. In total, it could be 100 billion if you think of their own refinancing need, but also the need of the regions in Spain. And therefore, that 100 billion is difficult to come by in the market. So Mr. Rajoy is quite right to put the writing on the wall.
Yeah, interestingly, a Reuters poll saying that nearly 50 economists found that most expect the ECB to start buying Spanish and Italian bonds come September. Let's go back to this Der Spiegel article now. It talked about Italian magazines referring to the Fourth Reich, Greek media caricaturing Merkel as Hitler and perpetuating this idea that European policy is being orchestrated in Germany amid this growing antagonistic atmosphere. Are we nearing the breakup of the Eurozone? Are his fears justified?
You're absolutely right. The euro at the moment is driving Europe apart. The Eurozone is not working well together. In fact, the non-Eurozone EU members are having a relatively relaxed time. Think of Sweden, for example. Think of Denmark, good growth, low unemployment and no deficits, whereas the Eurozone itself, it's tearing itself apart. So therefore something is not quite right. The question really is, should the Eurozone become more or less the opposite of what it was intended to be 12 years ago, no bailout and certainly no central bank money printing to fund governments, or will it now dive headlong into a very different kind of Eurozone, which, for example, the German taxpayers signed up to? And therefore, Mr. Monti is right to say that the euro is becoming almost a dangerous poison chalice for Europe. And in my view, they also have to ask themselves, is it really worth hanging on to a common currency if it's doing more harm than good?
Yeah, the debate just runs and runs, doesn't it? Georg Grodzki, Head of Credit Research at Legal and General Investment Management, many thanks.
Many thanks.
Now, the price of gold is down some 16% this year and well off the peak it hit last year of $1,900 an ounce. Gold mining companies have been bearing the brunt of the fall. Anglo Gold Ashanti, one of the world's largest gold miners, reports its second quarter earnings later today. Its already announced profits will be down 40% or so. Jeremy Howell has more.
With gold fetching around $1,600 an ounce, who wouldn't want to be in the business of mining it? South African-based Anglo Gold Ashanti, the world's third largest producer, made record profits last year of $1.3 billion. And yet it failed to impress the markets.
Investors in the world's financial centres normally pile into gold mining stocks when the price of gold starts rising. That's because beyond the break-even price for producing gold, every dollar added to the price is a dollar of pure profit. Earnings can get very high indeed. But that hasn't happened this time round. Last year, while gold surged to $1,900 an ounce, investors steered clear of gold mining shares.
People are very concerned there might be a major crisis coming out of the Eurozone that could cause a significant correction in the global equity markets. And all the equities will be affected by such a correction, and more so the so-called high beta equities, which are the mining stocks as a sector.
Over the past year, the gold price has fallen by 16% to around $1,600 an ounce, still very high. But the share prices of Anglo Gold Ashanti and its competitor Harmony have both fallen by 20%. Goldfields stock has fallen by 30%. All these companies are hoping for a price rally before the year is out. Will it come?
It's signals coming out of the US that will really get the gold market excited. And the sort of drivers coming through from that is that if we do see QE, a lot of people fear that that could stoke up inflation in the future, and more immediately it could feed through to dollar weakness, both of those being strongly pro-gold.
Another round of quantitative easing would give US investors more cash to put into commodities like gold. Inflation and a weakening dollar might prompt them to buy it as a safe haven. But while all of this would boost the gold price, it may not boost investor appetite for the gold producers. Jeremy Howell, BBC News.
Okay, time now for a brief look at the markets. And in Asian trading, we can see that stocks, they've risen for the first time in 4 days, actually, with the regional benchmark index poised for its biggest advance in more than a week. There are the currencies for you as well. The yen weakened, actually, while the euro scaled 1 month highs against the dollar. That's all from me. More business next hour.